This is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, August 30th, 2019. Lots of good stuff to cover in this one. Not sure where to start, but before we dive into the charts, let me start here. Let me take a look at something and just address both the members of the site, subscribers to rightsideofthechart.com, as well as those that follow our free content on the YouTube channel or on the site directly. There's sometimes posts with market content with individual chart images instead of videos and other commentary there. The YouTube channel, the posts have been light. I've skipped a couple days here and there, either if there hasn't been anything significant to report, and sometimes there is, but what I'm doing is generally stock market analysis, broad market analysis, coverage of the stock market is free content available to, on the YouTube channel and on the site. Although lately, I've been hyper focused on the stock market, on the equity indices, and also not posting hardly any official trade ideas lately. I mean, we do have an official trade still out on QQQ, maybe a couple other things. I've shared quite a few other trades that I'm following closely, trade ideas, gold, silver. We have still silver miners, ETF, some things like that out there. But again, the official trades are light, and the reason is, as I've mentioned to subscribers on the site, we're in a trading range. Make no mistake about it. I think I picked up on it pretty early on, and by now I have to imagine the rest of the world sees it as clear as day. You don't have to be an expert at technical analysis to see that. I guess I'm now referring to it as the August trading range, because it really started back here. This was August 3rd, Friday, August 3rd, and here we are today. So you're looking at pretty much almost the entire month trading in a very well-defined sideways trading range, numerous reactions on the high of that trading range, and today another failure right at that level. I have it at right around 294, give or take. You're talking a high today in SPY of 294.24 on a 294, almost 300 point security. 24 cents is statistically insignificant. It means another perfect tag and failure there. Now we're at the top of the range. We can punch through tomorrow, but I'll get back to the charts in a second. What I wanted to talk about, and I'll go back to that article that I've said this recently, and then the other day the Wall Street Journal came out with an article stating what I've said is there's been an extremely high correlation in the markets lately between stocks, individual stocks, as well as commodities and some other things. And what it's saying is, the article goes on to say that's also an indication, a warning sign for the stock market, because it shows people are indiscriminately buying and selling indexed things such as index funds, SPY, QQQ, things like that, versus selectively picking stocks, avoiding the most bearish stocks with the poorest fundamentals or technicals and focusing on the most bullish stocks. And so what happens, and I've explained this recently, when you are in a trading range, as we have been, and that trading range in SPY here measures from top to bottom about, 4%, a little better than 4%. Swing trades don't work well. And that's why I've held off with the official swing trades. So I'm going to use an example. So if you're in a stock, let's say you take a swing trade, and you're targeting 15% profit. That's your profit target, right? I like to use a risk-reward ratio of 3 to 1 or better usually. So in that case, I would have a 5% stop-loss allowance on that trade, right? 3 to 1 risk-reward ratio. Now you get in a trading range like this, and remember, this is just the broad market. In an individual stock, most stocks will go up more and down more than the market, because SPY has a lot of utilities one day that may be going up when the banks are going down, vice versa. So kind of smooths out the bumps. That's the whole benefit of buying the SPY or the S&P 500 is a tremendous amount of diversification both among stocks and individual assets. So my point is, it's reasonable to say over the past month, and you can pull your favorite stocks, especially those that are heavily indexed like Apple and Microsoft. It's easy to say that on the majority of those, just in this down back and forth noise, you would have had a 5% stop hit several times over, where you probably wouldn't have made it up to a 15% target, whether you were going long 15% to the upside or short. And therefore, this is not a conducive. This market's conducive to active swing trading, and I've been day trading. If there's time in the video, I'll show you some, some day trades that I posted in the trading room today and made, and they worked out well. And that's when my focus is. I kind of change hats, if you will, from a typical swing trader down into a day trader. Now, all along, I've continued to maintain, to those that are listening to me, that I still favor a downside resolution. There's been back and forth. My convictions have ebbed and flowed a little bit. They've never wavered. In other words, I've never flipped to we're going to go break out to the upside. I'm open to that possibility. Anything is possible. And as I said, the nice thing about it is, on the swing positions, I talk about that a lot. I wear different hats as an active trader and a swing trader. Swing trade accounts are IRAs, my longer term accounts. Those are positioned for the most part. They're diversified with other things, but as far as the equity markets go, they're positioned short and have been since right here. I was short this wave down, mentioned covering, going long there for the bounce, and then started to scale out of the shorts and into out of the longs, off that lows on August 5th and back into shorts when we hit the bottom all the way up to the top of my bounce target range, which was exactly here. So we hit the top of where I expected the markets go, my uppermost target. I expected to stop anywhere from here to here. We've hit it now multiple times. So again, that turned out to be the ceiling for this trading range. And so then again, swing shorts are scaled into here. So even if we pop the top of the range, I'm fine giving a little room, a couple percentage points, and I'll still be a slight loss on those trades. Now the active trading again, whether it's day trading or short-term swing trading a day or two, that's this stuff right here. Trading the rips and dips within the range, and even then zeroing down to the 60-minute and 5-minute and even 1-minute charts like I did today to identify some of the other trends. All right, so that was again the point that I wanted to make there with this article, and it also then that's the reason for the lack of official trade ideas. And as far as subscribers to the YouTube channel, I released a couple of videos I did earlier during the day. Intraday updates, especially anything that covers gold, silver, anything other than the broad general stock markets that's typically reserved for subscribers. So I released a few of those after they had been published earlier in the day or one from the previous day. And you'll note when I release these videos, that's why I always announce the date and the time. So pay attention. If you're a subscriber to the YouTube channel and you get a notification, new video, well, look at the date on it. I usually put it in the title and listen to when that was. From time to time, I do like to release the what was subscriber content, just so you can get an idea out there. Because if you only follow the public videos on the markets, you might think that's all I trade, and that's a very small part of what I trade. I actively trade commodities, natural gas, oil, silver, gold, you name it, wheat, corn, soybeans. If it has a ticker, I'll trade it. All right, so that's that. And going forward, because I am hyper focused on the markets, and I still think a pretty big move is coming. I believe it'll be to the downside. Therefore, some of the market analysis will be reserved. The general market analysis, stock market analysis, will be reserved for subscribers until the market opens up more conducively to swing trading, and then I can add some more individual stocks, commodities. But right now, everything again is moving in lockstep. So let me make a note here. I want to cover oil with you guys today, even though that's usually subscriber content. I'll hit on oil. All right. So that's it. Bigger picture. Nothing has changed. We are pushing the top of that range, so remember it's a 3-day weekend, so chances are over a 3-day weekend you're going to gap up. That's an extra day. It's 3 total days of overnight risk, an extra day of overnight risk. And so, as I made mention earlier to those subscribers to the site, you have to think about how you want to go home this weekend, because anything can happen. You can almost expect some kind of tweet from Trump or some other potential market movement event, and that can easily go either way. So I've shared my concerns. I'll get to the intraday charts in a second, or I've shared my thoughts as to where we're going. And while I'm on this daily chart, I'll just tell you, usually when you come up to a top of a range so many times, it's not unusual, and it wouldn't surprise me to see a brief pop over there. If so, I'll tell you. Now, of course, there's 2 components to that. first would be a brief pop, and two would have to fail and come down. Just a pop above is a breakout, and you have to take a breakout on face value unless it fails. I'm talking, how I'm positioned, thinking short. If you're a bull, you could take that breakout as well, with a stop somewhat above if it happens. But this would be, a pop above there next week would be actually the most bearish scenario I can envision. Why? You might say, well, that's crazy, Randy. A break above that level means the bulls won. This has been a battle fight between bulls and bears for a month now. Well, again, if the second part happens, if you then reverse and especially impulsively come back down well below that level, because that would be a fake out bull trap, whipsaw, whatever you want to call it, all the same net effect. It would have tremendous stop clearing power. It would, I have to imagine there's a lot of shorts, because this would be an obvious place if you're short to have a stop a little bit above there, and that's why I'm giving mine a little room, especially on a daily closing basis. Intraday, that would be the worst case scenario for the bulls and best for the bears, to see an intraday pop looking pretty convincing, strong, maybe a gap up, and then fade. It's one of many possible scenarios, but if it did happen, because it would help clear out the short interest. All I've heard about recently is how bearish everybody's been, how low sentiment got, all that stuff, and I have no doubt that the short interest is up. The markets can only fall so much when you have a high short interest, because shorts are the only guaranteed buyers of stock. That's what I like to say. A bull, let's say, a bull may be bullish in rhetoric, saying he or she thinks Apple's going here, all the way up here, SPY is going up here, the market's going higher, but they don't necessarily have their money where their mouth is. They may or may not. If I short a stock, I must buy that stock. I must at some point buy to cover to close my position. So shorts are the only guaranteed buyers of stocks. Bulls can talk about it all day long, but maybe they second guess and they never step in and buy. So when you have a lot of shorts, remember what's going to happen on the big drops. You have profit taking along the way, and that's why a heavily shorted stock or market will only go down so far. You also have the risk of a short squeeze when there's too many shorts in there. So again, that's a contingency there, one of many possibilities. Now, being short in my accounts, would I prefer to see a gap down and drop? Sure. And it would certainly be bearish. Don't get me wrong if we gap down on Tuesday when the markets reopen and head down. But until and unless this trading range is resolved, meaning a convincing, definitive breakout, not a little pop above, a little below with a move back up, but a impulsive move, a daily close, better 1 or 2 daily closes above there. Until we get that, we are in a trading range, and you just need to recognize it for what it is, and that's that. QQQ, here it is, top of the trading range again. You just can't make this stuff up. I mean, look at how well QQQ is behaving off 189. It's like a brick wall. Now, like I said, if I told you that didn't scare me being short, but I also in my active trading account, well, it's a long story. I came into the day, came into the day short, reversed long. At some point then reverse back short before the close. I'll get into that in a minute and show you if I get to the day trading charts. But that's it. Failure, 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 failure. If we keep failing at 189, that's the top of the recent trading range. High today of 188.97, 3 pennies, close enough for government work. That's effectively a perfect tag. So there it is. And you can look at it this way too. More so, we still have a trading range, and on the futures it shows a little better, really, these the distinct lows down here, but it almost looks like an ascending triangle pattern when you look at it this way. And ascending triangle patterns are inherently bullish, meaning they more often not break to the upside, but they can break to the downside, and when they do, that's quite bearish. So that's what QQQ looks like, and again, to be continued next week. Okay, let's talk futures. This morning I updated, put out these charts on the futures, and highlighted to subscribers that we had the most recent of a series of divergent highs. Watch, rinse, repeat. Let's see. Okay, that was right here this morning in these charts. Screenshot it right when the market opened at 9:32. and said we have these divergent highs. I also mentioned yesterday in yesterday's videos, one reason that I expected we had minimal upside is we were oversold, and you can go back and just look at all the oversold. Now my version of oversold, I covered this in the subscriber video yesterday, but I don't know if that one was released on YouTube. I don't use the standard 70 level. I will on a lot of stocks and securities because that's usually oversold. That would be right here. We'd have a line between 80 and 60. I treat every security differently. I look at where is that particular security become overbought. Is it 70? Is it 65? In this case on NQ, it's about 83, 83 and a half. You can see the red line. That's where NQ stops, or has historically stopped and reversed when the RSI hit that level. So again, and as I said in there yesterday as well, sometimes you hit it and then you come down and you make a slightly lower high oversold or near oversold reading. And that's even better because that gives you what I like to see for a nice reversal, negative divergence. So you can see on this 60-minute chart, goes back to the beginning of July. We've had only 1, 2, 3, 4 divergent highs. This one led to that drop. This divergent high was followed by that drop. This one was followed by that drop. And here's the one I pointed out today. So I had us going down here. You can see breaking this small wedge. We had a bearish rising wedge, and had us breaking down and going to back test this trend line. And that's, from here, we'll see where we go from there. That was this morning's chart on NQ. This is what it looked like on ES. Same story, same wedges, same overbought readings, and same prediction that we'd break the wedge and go down at least for a back test of this trend line. So again, that was when the market opened. That was then. This is now. Here's the trend line right here. We back tested it, overshot it by a hair right there. And you can see the wedges broke down, and it was also an impulsive rejection. That's what I like to see off of divergent high, and a rejection off resistance. In fact, if you look at NQ, which are the NASDAQ 100 futures, we've had 1, 2, and now several series right there. We'll call that the second reaction, and now 3 failed attempts. And again, not by coincidence. This is similar to QQQ, just the values are going to be different here. So these are the stock futures. NDX futures that keep failing at 77, 75 or so. And so let's look at this glass half full and glass half empty. Glass half full if you're a bull, and I have to fully acknowledge this scenario because they parked it right here to keep everybody guessing over the weekend. As of now, this is nothing but it's simply a breakout and a back test of the downtrend line. And if I was bullish on the market, and I'm, like I said, my convictions aren't as high as I'd like them to be. It's certainly not high enough for me to go long right now, in fact, or to come out of my shorts yet. But that's what the bulls want to see, and they may see that. And so the first part tomorrow, not tomorrow, Tuesday, would be, it's not going to look like this most likely. I doubt we'll open flat. It's possible, and if we did, you'd want to see us rally up, and then you need to see us take out 77, 75. But this could happen, and it could happen that way in the futures. Remember, they open Sunday night. But either way, 77, 75 is the big number. Like I said, I'll give it a little bit of room. You can see resistance up here at 79.25, allow for that potential fake out move. And of course, what the bears want to see is a failure, move back down below that level. And then, as I talked about in the video early today, the way I view this as and if each support level below gives way. Here's the first one, 76.51. I posted covering my shorts and then going long right there this morning. I'll get to that chart in a second. And then that was my bounce target, which was hit almost exactly right before the close. And then I got back in short for the, that was a day trade size, overweighted position in NQs. But then reversed it to just a mild position. We're going into a 3-day weekend. I'm not going to go take anything crazy because, of course, we're probably going to gap one way or the other. So bears want to see us gap down, and what I was getting at a minute ago is the way I view it is as and if each support level I have listed below gets taken out, that further increases or strengthens or solidifies the bearish case that we're going to go down and then finally get that waterfall type selling I was looking at when we take out these lows. And that is, I'm looking really more so On NQ, you can see we have these three distinct lows right around 73.80. Yes, this was the low on August 5th. It was a bit of a momentum fueled overshoot, and it's certainly an important reaction low. Don't get me wrong. I'll be watching. That's the nail in the coffin level if 72.20 goes. But I really think the nail in the coffin will be if we get back down here to 73.80 and undercut that, take that out with conviction. And again, the way I expect it to happen, if we do, again, it's all contingent. We can go the other way, and I'll be talking about different things come Tuesday. But as of now, I want to see the downside move, and then if each of these levels go, especially that midpoint. I have a midpoint in this trading range, or at least a level that's pretty important to me, about 75.55 right here. You can see a lot of reactions. This was a support shelf in here. We had a couple brief dips below, but we shot back up. But it contained all this selling right here throughout this point, all this trading. It was resistance right here. See, we hit it from below, fell back. Hit it again, finally broke above it and rallied. And it was also support right here and resistance on the first couple tags right here. So I just see a lot of reactions around that level, and that's just how my mind's eye works. I see a battle up here. Very few. We only visited down here briefly. These dips below were very brief, and the market was able to recover. But I think, third time's a charm. Well, that was a third time. The fourth time should be the nail in the coffin, I think. So that's what I'm looking for. And again, we'll be talking about different things if we break to the upside next week and we don't reverse. Ideally, that same day, close back below this 77.75. Let's look at ES, and then we'll move on. ES, again, I showed you the charts from this morning. I had these wedges. Nice clean wedges. That should have been a line tool, not an arrow tool. Just disregard. And sure enough, we broke down, and sure enough, look at that. I haven't moved this trend line since. A perfect kiss. Back test of that trend line, and not just a trend line, but there's that 29.14 level I've had on here for a long time as well. So pull back to support hit, got my bounce target, and that was all I was looking for today. I didn't expect any fireworks going into a 3-day weekend, and that's one reason. After that, as impulsive as that move looked down while it was going on, that's exactly when I wanted to cover shorts and be long. It looked like an intraday selling climax to me, which it did prove to be. Here, in fact, there's a post. I posted the time. I haven't refreshed the page. It was longer than 5 hours ago. So I said right there, reversing my NQ short to a long. NQ provides an objective long entry here. It's support for a day trade bounce. Had it going up there. After that, posted my where my targets would be exactly to this member in the trading room asked where I'd close that out. I said. Originally, I was planning to close 2/3 out at 76.96.25, and then I said changing that to close them all out there because we had about 10 minutes to the close. And I also set up this situation here. Well, that was the ES hitting the same level. That was me making the case for, shrinking the charts there, for the bounce there on ES again. So it was a high probability trade. You had not just NQ, the NASDAQ 100 futures, falling to dual support levels, price plus the back test of the trend line. That in itself would make me want to go long and cover shorts for just at least a bounce. But you also at the same exact time had ES. So that was to me what I call a high probability trade, and that's why I posted that as a day trading op. And then I went on, and shortly before the close right here, 7 minutes to go, and before the close, and I took this screenshot. This is a 2-minute chart of NQ, and to me it was a very clear level. I could almost see this happening right here, and that's why I posted it. I still had my target in there. Remember, it was just under that 7,700 level where I said I planned to cover, and so I changed that order just to close all my short contracts of NQ out and then reverse to a long. Interactive Brokers lets you do that. It's nice. One single trade if you're short, 6 contracts NQ, or long 6 contracts, and you want to go short 3, you just put a sell order to sell 9 contracts, and it'll boom, in one order, one commission. It then does the math and says, okay, we closed out your 6 at the same time and gave you an extra 3 short. And so that's energy. This is just like the trading range we're in on the daily chart, the daily chart for the last month that I showed you. Trading ranges, as I talked about, are coiled springs, building energy. And so from there, we let's close that out. We popped, and then that was the well, you can see it there in this chart here. Popped, ran right up to that level. Again, this is a 1-minute chart. I don't even know if you can make it out very clear there, but we very, very impulsive move if you have a futures chart. Even QQQ, you could see it right before the close, and then boom, hit the target and pulled back. So that trade worked out well. Congrats to those of you on the site that caught it. Okay, I started the video talking about the strong correlation of not just stocks, individual stocks within the sectors, but also different asset classes. Here's one of the most widely traded commodities, CL. Does any of this look familiar? Topping back here, recently, what was that, early July, coming down, and then if you look at it this way, having this trading range here for most of the month now. We've been in this trading range. We overshot it briefly, but going back and forth. Looks just like the stock market. And then also, remember those downtrend lines that I just showed you we took out today? We took them out on QQQ and SPY as well. We broke out. Again, we all see what we want to see. Like I say, charts to me are like those ink block tests. If you're bullish, you see what you want to see, and that would have been a breakout, and you might have gone long. What I saw is a breakout likely to fail because we had, just like I showed you in the futures, this is a 60-minute chart of crude futures, by the way, but just like the indexes, we had negative divergence. And I could even draw a trend line there, little wedge. So it's not coincidence. Right now, everything's trading lockstep because fundamentals have kind of been thrown out the side. Nobody really knows what to do because are we going into recession? Are we not? Are those fears overblown? So you have everybody just indexing, trading these things. And now crude is trading based on the outlook for the stock market. If I'm wrong and those that are saying, hey, this economy is headed into recession, the wheels are already in motion, then we're going down. Stocks earnings go down, stocks fall, and then crude will fall because of the deteriorating economic fundamentals. Crude oil demand goes up when the economy is strong and it drops when it's not. So that's why crude's trading like the stock market. And so if you're trading crude and you think you're diversified right now, you're not. You might as well be trading SPY and ES, the S&P 500 futures, because they're highly correlated. So if markets pop and everything goes up next week and a significant rally for the next few weeks, it means that the masses, the majority of traders and investors out there believe that the market's going up and the economy is going to get better, at least for a while, and stock market will rally, and most likely crude will as well. So I just want to bring that up there. And crude's also trading well to the technicals. These are all levels. I haven't even modified this chart in a while, and you can see it bouncing off all these support and resistance levels, a lot like the market. Okay, and finally, we'll just wrap it up. I don't believe I covered the 60-minute charts of the index ETFs. I've spent time on the futures, looked at the daily charts, showed you those ranges. Here's QQQ for those of you QQQ traders. Again, here's the downtrend line. We broke out, but as I said, we had divergences in the futures, and this was not what I mentioned earlier in the video earlier today, is that this breakout was not impulsive. There are a couple things I like to see on a breakout. Number one, I want to see impulsive buying. I want to see big green candles, more the better. I want to see increase in volume. That is not exactly, in fact, we didn't even have barely on average volume. So the breakout was not impulsive. It was not on above average volume, and as such, therefore, it was likely to fail. Breakouts that are not impulsive and not confirmed on volume have a higher rate of failing. So you can see that we failed there, and we closed pretty much on the trend line. So it's like I showed you on the futures. Pretty much we closed on a back test. So Tuesday, it's anybody's game. Again, if we gap up, or let's say we open flat, you still have to take out that 189.50ish level, 190 or so on QQQ, and you still have to take out on SPY. SPY looks like the breakout, held. It's a little bit above the back test. Again, it depends how you draw these downtrend lines. That's why I look at futures and the ETFs. But look at all these failures here. 294, 294, 294, 294. And again, down low, you have a lot of reactions down low, and that's it. So let's just call today a stalemate. Even though we're down on SPY, down a little bit, QQQ was down a quarter point. That's virtually flat to me. So let's say nobody won today. I told you where I think we go next week, but if we don't, then things could start to go the other way. So we'll just have to pick this up next week. If SPY does pop, if the markets pop next week, and you want to know where a breakout should, quote unquote, should stop, if it's going to fail, I think right here. Let me give you that number right now too. It's pretty good resistance up there on SPY. That's about 296.60. We'll color that line. We'll pick any color you want, something that stands out. That's a pretty important level. You have the breakout from the previous highs on SPY right here. We had a consolidation range after we broke out. We up in here. Let me just show you that with a line tool here. We broke out and then we consolidated for a while, and then right here the breakout failed. That big impulsive move back down, and back at the time I expected that to fail for the same reason I expected this one to fail today, because on the more important daily chart, when we broke to new highs, we were overbought and we had negative divergence, which told me that that breakout to new all-time highs in SPY and QQQ would most likely fail. When it failed, it didn't just limp through there, it was impulsive. So to me, this is an important level right here. That's where the breakout officially failed, and you can see it's also, you know, pretty decent resistance, because support, which this is, once broken then becomes resistance. So that's it. That's about as much upside as I'd like to see. Anything above that I start to scale out, especially if it looks like we're headed for a solid daily close. If we close another day above it, I'll be just like I was scaling in from here to here. With swing shorts, I'll be scaling out from here to probably somewhere in there. We'll see how things go. Of course, like I say, the charts are dynamic, and so is my analysis. Likewise, if we break to the downside, you know, although I have my fill for now for swing shorts, I would certainly be adding to my active trading account. And then if we take out the levels I mentioned before, even before the lows, is where I'd most likely be adding to swing short positions as well, and again, especially in the active trading account. All right, we'll wrap it up here. Again, have a great 3-day weekend. For those of you in Florida, stay safe. Hope the storm misses you, and we'll pick this up again on Tuesday.